and welcome to Swinging for Profits. Today we're going to go over and review on what to do when a trade don't go your way. First, let me correct myself. Yesterday I had said we entered into a DIA call on an August weekly second week. I was wrong. I bought the fourth week August calls. When I'm buying these calls, I'm trying to buy as much time as I can on a weekly option. A second week August call would be expiring next Friday. That's too short. So we've got fourth week August 178 call. We purchased it for 73 cents. As you can see from today, it did not go as anticipated. So we're going to go over what we do here when we hit this type of thing. We got it for 73 cents. Today this ended up closing down $1.14. So you got two ways that you can look at this when you enter into these trades. You can do a stop loss that you're only going to risk X amount of dollars on a trade. I don't agree with that method. Let me explain why here. Let's bring up the cues because this is one that comes to mind that I just traded not too long ago. Okay, what we got here. Back over on 6:30. Here's one that we were looking at. We got into this trade on 6:30. We were looking at a 110.50 call. We got in down here. Now there was a couple things I didn't like about this. I knew we were going to have the 4th of July weekend coming up, but I liked what I was seeing here. So we went ahead and what we normally try to do is get about 2 to 3 weeks worth of time on these weekly options when we're doing it in case something doesn't go our way. So initially things did go. Next few days, not so well. That weekly option went from about 45 cents a contract right into the toilet down to about 10 or 15 cents. Most people, I don't know what everybody's tolerances are, but you're looking at something that if you would have bought 10 contracts at 45 cents, it's 450 bucks. Now you're down to 150 bucks. I know some guys, they would have been throwing a towel in saying forget it. When we're doing this thing, our stop loss is basically the contract amount we're entering into. Okay, 90% of options expire worthless. Okay, so with that being said, for you to go into this thing to think that you're not going to lose money is kind of asinine. To do a $200 or $300 stop loss on this thing is kind of crazy too, because here's a perfect example. Okay, you're stopped out, you're out, you're done. You've got out of the trade. Well, 1, 2, 3, 4, 5, 6, 7 days later, here we are. Okay, we stayed with this trade. We look at it as we're putting $450 out on the table. We're going to let it ride until normally the last week. If we don't feel we're going to go anywhere with it, we will then at that time exit our positions. Within that time, I was able to turn around and take that from 45 cents well up over to $1. We hit our price target. We got out here. Kind of wish I would have held on a couple more days. Hindsight 2020. So let's get back over to the diamond, because you can see today did not go our way. We were in at 73 cents. So 10 contracts at 730 bucks. At the close, I think this thing was down to around 38 cents. So the way we see it, we got 2 more weeks worth of time. We need to get back up into this range relatively quickly. Is it going to happen? It could. They are sure marking this up as the end all to be all. I seen a nice headline today. Get some cash ready. Market's dropping like a knife. Really would like to know what this guy was looking at here. I'm not going to name any names, but you can go around to some of the more popular sites and take a look. But let's look at a weekly chart here, because I don't see a dropping knife here. What I see is a market that's pretty much been range bound for the last pretty much 2 years. You know, we're looking at we'll move over and we'll look at the futures. You know, maybe he's seeing something I don't, but to me, pretty steady uptrend. You know, we'll go back to the beginning of July 14. You can see this market, beginning of the year, 1.7. We had a low of 13.232. Finishing out the year, we're going to go like this. Finishing out the year on 12/30, we had a close 16,329. Okay, so that was 24% change. Okay, that raised 3,000 points for the year. Not too bad. Okay, let's get on over here. Beginning of 14. Okay, low for the year 2014. We had a low 15,276. We closed the year out at a high of 18,036, a change of 2,775 points, 18% from high to low over the year. Okay, now fast forward into this year. We had a low 16,962 to a high 18,334. There's a change of 1,372 points. We are down, but we're halfway through the year. Where the rest of the year is going to bring, I don't know. You know, but overall, looking at this thing, all of 14 was pretty much, in my opinion, a sideways market with a little bit of an uptrend potential. Here we are, 15, sideways market, slowly making it. You know, you note the other day, there are some moving averages, prices are dropping below, you know, but the biggest one, it's still holding. You know, maybe he was talking about the S&P, so let's take a look there. Yeah, I do not see anything dropping here. We definitely know it can't be the NASDAQ. That's been everybody's darling as of late, and looking at a weekly chart, you know, I don't see it I do not see it. You know, looking at a weekly chart helps put things into perspective. Let's go back here to the ES and take a look. Okay, not too shabby. Let's bring it back down to a daily. Okay, daily chart. Yeah, that looked like a drop-in knife right there. But I'll tell you what, and I do remember this trade towards the end of this year here. Right about this point, everybody was just saying, here comes the 10% correction. Here comes the 10%, the 15, the 20. The market is going down. You know, you got your 10% correction. Okay, there is a 10% change in that price from high to low. Look at where we've gone from there. Okay, knowing that most people were probably getting loaded up on the shorts here because here it comes, they all waited, we're in trouble. You got your head handed to you on a platter, but good on these. We're getting back, and we'll go back over and look at the Dow again. Yeah, the Dow is trading a little bit below its 200-day moving average. All in all, we're liking this trade. We're going to hold on to it. You know, the big news that everybody's waiting for is this Friday's jobs report. You know, we get what people like here. There's no reason why it can't get pushed back up into this level and moving forward into next week. Today's was the media. Bad reports on the stocks, media, drug everything down. I don't really see anything other than an excuse to knock these markets down, and they're still looking good. NASDAQ took it pretty hard on the chin. Look over at the Qs. Same thing. You know, it took it pretty good here. We knew we were going to come back down, challenge these levels. Just couldn't tell you when. Well, they did it in a hurry today. Spider, same thing. You know, $1.70, $1.72 hit. You know, it brought back down to these levels real quick. If I'm looking, do I want to get right back in here? Not just yet. We'd like to see what happens over the next day or so. We're in the diamond. We're staying in the diamond. We're not going anywhere with this trade. Yes, we have came back and challenged this level, which we thought we were. We had a low of 173.78. You know, it made a newer lower low today. It's there. We're waiting and seeing what happens here. What I did like, you know, it bounced back up and came up. Still the bottom range of the day's trading, but all in all, the grand scheme of things, looking at it, I see more upside potential to downside potential on this. We've got the jobs report coming out tomorrow. That's going to be key. We'll see where it takes these markets. Once again, thanks for watching.